What's going on YouTube? It is Dave's Daily Trades back at it again with another video on AMC. And boy, we do have a lot to cover today. So we are, of course, going to start the video off with a quick AMC technical analysis and go over some price predictions for the rest of the week. We're going to take a dive into the Ortex data, and to finish off today's video, we're going to be looking at the inflation report for July and really how this kind of looking back at 2008 is very, very similar. All right, so without further ado, let's jump into today's video. So, guys, we did start off today right off the jump down, came back to retest that resistance at 32, got rejected, came back down, hit a low of $29.40. And of course, we all know that is a huge discount on AMC, and apes were actively buying up this stock again. So, of course, a few things. This will make a lot more sense when we look at the Ortex data. Just to give you a sneak peek, Ortex data, I think short interest percentage went up like by 3%, something like that. So, of course, shorts were active today, driving this price down. But the thing is, for the past several days, they have not been able to drive it down much below $30. And when they do, we step right back in, take the discounts, and buy the stock back up to around $32. And it's been a rinse and repeat now for just about a week. So very interesting stuff. But after hitting this low, like I said, apes bought right back in and closed at just negative for the day for 0.63% at $31.55. And now after hours, we're up. It was just about 1%, but $31.83. So we're going to jump right over to the weekly chart. I know this is something I don't really or usually look at, but there's a lot going on here that I did want to cover. So, of course, I have drawn this wedge-shaped pattern, and as you can see, since just about May 14th, this has really been forming. We hit this low here, stayed on this low for 3 weeks in a row, but once time came, we started spiking up and hit this high at $72. Since then, we have not been able to break out of this range, but recently, this week, retested the low of this support range here, and looks like we're actually starting to make moves higher. And especially from today, I really think that apes got hungry, bought back in, and we're going to see higher continuation on the day. Just for price predictions for tomorrow, so of course, $32 was a very strong level of support for us, but has since turned into resistance. So really, I would say we have touched down on this low almost perfectly, actually. So that's great to see. So I think we're going to retest this $32 tomorrow. And my prediction for this is we're actually going to open up higher than $32. I guess we'll see what tomorrow brings. But after that, our next resistance line is going to be right about at $35. A few things on the technicals here I did want to cover. MACD. As you can tell, these two lines are literally kissing at this point. So, of course, there has been a huge increase in short interest percentage. They have been driving the price down, but this could be our break when MACD crosses over because, of course, AMC, we know it's manipulated, guys, but the thing is, day traders and swing traders do look for these technical setups, and that does bring volume, which therefore is going to help us reach higher levels. So that's why we can't completely throw out the technical analysis here. So good things piping up, a lot of things going on, and we'll just jump right into it. So we did touch base on the short interest percentage. Like I said, guys, we're up 3.02, and this was just about at midday today. I think it was more about like 2.87, 2.9%, but close enough, guys. Anyways, we're up to a current short interest percentage of the free float right now at 18.51%. And going back a few weeks ago, we were only at 14%. So this has been massively going up, which is very interesting. And of course, 94.67 million estimated short interest. So that is really high. But really the big thing for today that I want to take a look at, we have briefly touched upon this before, but this is just pretty crazy. So what I have on the screen right here is inflation reports from 2000 all the way to current date 2021. And of course, this indicator up here does lag a month because it takes time to compile all these results and whatnot. because we know how much the government moves and how quickly they are. That was very sarcastic. Anyways, guys, so down here in 2008, we saw the highs of 5% here. And what we saw was 3 straight months, 1, 2, 3 straight months of higher and higher inflation, and especially at very dangerous levels. 5% is very massive. Now, I can promise you, because I have looked, there is not a single other 5 on this entire page, 5%, until we get to current date in May of 2021. That's when we had our first reporting of 5.0. And look at what happened here. 4.2 to 5.0, 4.2 to 5.0. Pretty crazy. And as you can see from January, guys, this has been increasing quite a bit. And of course, it is going to raise some red flags here. Now we've had 3 straight months strictly above 5%. And look what happens. This is going back to the financial crisis of 2008. Of course, with housing and all that fun stuff. We don't have to dive into all of the logistics of that. But really, in September of 2008, that's when the market really started to take a hit. And obviously, it took time to play out, as you can see here. So, of course, guys, we don't want the market to crash. But a lot of things have been going on. Banks are over leveraged, and I do urge you to please take a look at the interview I did on Monday with Boss Blunt. Actually, I posted on Tuesday, but that really took a current look at the overall economy, how things are doing, and just a sneak peek on it. It is absolutely horrendous. It is so bad. So, guys, with inflation on the rise, lots of bad economic reports coming out. I mean, I hate to say it, but it really is a matter of time because these are unsustainable levels that we're at right here. So the biggest thing that is working in our favor is when the market tends to take a correction, or even if investors start to get wary of what is going on here, they need to park some cash on the sidelines, or if they don't want to leave the market, what do they look for? They look for stocks with a negative beta. And AMC and GameStop as well have negative betas of, I believe it's somewhere around like 2.6, which is really, really good. And that's negative 2.6, just to clarify. So that could also bring in a lot of new investors into AMC, kind of hedging for any market corrections that may happen because of reports like this and the ones that I covered in the interview on Monday and posted Tuesday. So guys, I know things have been boring for us. We haven't had crazy price action like we're used to. And especially for you newer apes who came in around this time back in April, May time, yeah, things are getting boring, but it's okay, guys. All it is right now is a waiting game, and, you know, patience is really key here. So, guys, that's all I have for today's video. I know it has been a few days since I posted a daily AMC update video, so be sure to hit that like button. Also, subscribe for more content. Peace out, and tune in for tomorrow's video.